Okay, so hello and welcome back, guys, to the channel. So let me make sure this is recording. Yes, it is. Okay, so um hello and welcome back, guys, to the channel. This is Green Pips FX once again. So in this video, I'm gonna be ultimately talking about refinement of supply and demand zones. So this video is gonna be an introduction to you guys on how to refine these S&D zones and get the best out of them, right? So without further ado, guys, do hit the like button, subscribe if you haven't, and hit the bell button. And if you want to contact us, kindly follow us on Instagram at official Green Pips FX. You can do it. You can DM us there, and we'll be happy to reply. So let's get into it, right? So on the chart here, I'm having the gold chart on the 4-hour time frame. So this was me doing a gold monthly breakdown for you guys. So again, if you haven't checked that video, go back, check the video, and be back here so we can be together on what I'm gonna be demonstrating in this video. So this was the gold monthly breakdown that I did, and at this point I did say that gold was now shifting bullish, and this was the potential great area for a very good and long-term buy until this demand zone here, right? So this was the buy of here, of this zone, looking to take price where here to this very large zone, and probably look for price to either continue higher or lower. So when we get here is, well, we'll know, but I'm not really talking about this, right? So let me get back to what I was doing. So again, the refinement of S&D zones is very crucial to a trader, right? Because you can't be trading the whole zone like this, right? For example, this is the 4-hour, and on gold, we know that gold has a very high pip count, like unlike other pairs, right? So for example, if you do take into consideration, let's zoom in a little bit. If you do take into consideration this last up move here before the down move, if you use all this zone, it's almost 3,000 pips, right? It's like 2,700 or something. So that's a very large zone. So refinement is crucial in taking this very large thing that you have here and minimizing it to the minimal point without losing focus, right? Without losing focus of what you're doing and what you're targeting and where you're targeting it, right? So I'm gonna be doing pretty much an intro to you guys on how to refine, right? And in the next videos, I will get in depth with refinement, right? What rules do we use, and literally how to spot the best demand zone within that demand zone, right? So you have this very large supplies on here on the far right, but if you go to the 15-minute, you're probably gonna have multiple zones here. So which one as a professional smart money trader should you use, right? So I'll be speaking of that on the next video to come, but this is basically an overall background to you guys on how to do this, right? So without further ado, guys, let's get into it. So firstly, we did have a trade here, so I'll not be using this chart. I just want to keep it at it is. So I do have another gold tab here. So if we do zoom into this and make it a little bit wide, right? So we did say that on the lower time frames, this was a breaker structure and a pullback, right? So you do have the break here. No, that was a breaker structure lower, right? So we did have a structural break here and that pullback, right? So the structural break from so if we do this, so this was the low, the high, the low, and the high, right? So this high basically came to test off this high. So boom, so we did have this original zone that was tested, right? So I'll be following off the candle open of this one and the close and the open of whatever the wick, right? So boom, so that's the zone, right? So this is the zone that we were looking to trade from. So this is the 4-hour, and on the 4-hour, this zone right here that we're having has almost like 535 pips, right? So that's 535 pips. Okay, so let's go to the 15 minutes, and the 15-minute time frame, this is basically the intraday time frame. So the 4 is the swingers time frame, and this one is for the intraday traders. So I will be talking about what I just said in the next videos. So for now, let's just keep it safe, right? Okay, so we do have gold on the 15-minute, and boom, so this was the structural break that I was talking about, this right here. So we do have the structural break, as you can see, right? The body of the candle closes below it. So this was the structural break that I was talking about. And after this break happened, well, let's just keep it at that was the break. So after this break happened, right? So if you do look at this, we are following order flow, right? So what looked like structure in the 4-hour is now basically order flow in the 15-minute, right? So because we do have intermediary structure that you could have also traded from, right? There were pretty good sells here that you could have taken these entries in like the 3-minute or 1-minute, but let's not talk about that, right? So after this break happened, we were positive that price would now go up to test somewhere, right? So where so this was the whole zone, this was that 4-hour zone, right? But now if you look at this, you'll find that there are potential areas that have been mitigated and others that haven't been mitigated, right? So if we do zoom in, I'll demonstrate about maybe 2 or 3 examples. You know, I'm just keeping this short because it's an intro video, right? We don't want to keep it, no, we don't want to keep it that long. So this was the high, right? And after the formation of the high, price came down and tested it, right? So this high was pretty much tested here, boom. So that's the test. So this high is tested. This S&D zone is now what? Trash. We don't look at it, right? That's boom, that's forgotten. We don't have this zone anymore, so that there is cancelled. Okay, so price after testing comes back down, right? When it comes down, you do have this zone right here, right? This up zone here, and price goes down, comes up, tests it. So boom, this again is what? Invalidated. We don't have this, right? So we forget about this, we cancel it. Come again, right? So price comes up, goes down, leaves what? You can either use this shit, where's my mouse shaky? You can either use this, right? But I would use this one, and why I will speak in the next video. But I have spoken about this concept before. I did say that wick themselves, these wicks tend to be their own supply and demand zones. I'll clarify that in depth in the next video. So price goes down and it's not touched right? So this is the most valid zone that we have until now, the most valid zone, right? So we already know that that's our valid zone. So what we're waiting for is the test to it, right? So price comes back down and price comes down, break structure, it comes back up, and what does it do? I mean, just look at this. Price comes up and does what? It tests the most valid zone, right? As I said before, price comes back down, boom, it tests the most valid zone, and boom, you have your test, and that's your entry, right? So that right there is your refined entry. So short position there, your stop loss where above that zone, right? So instead of having this 535 pip, this is gold, by the way, don't confuse it with other pairs. So this is definitely like off the charts in comparison to maybe like GBP USD or Euro USD or GBP JPY. So the pip count here is very different. So you had this zone of 535 pips, if I'm not mistaken, almost 500 pips, right? So let's say 500 pips, and now you have your stop loss of what? Of 172 pips. So taking into calculation, that's about okay, let me use my calculator here. So that's 5 double 0 divided by 170. Let's take it 170. So that's almost a 70% decrease, right? So that's almost a 70% decrease. And I mean, damn, that's high, man, that's high. So you get all that decrease. I mean, you decrease all that risk, right? Because trading is all about risk management. So instead of you risking 100%, you're now risking what? 30%, because there's a decrease of 30% of 70%. So you can see, guys, how refinement works. So this is the whole concept of turning a very huge zone into a very small zone that you could trade from. And as you can see, your trade would have been let's term it now into R, right? So let's say you were targeting the low, and boom, so this would have been your trade, right? If you were targeting this low right here, let's say this line here was your take profit. So okay, let's make this wide. So this would have been a 1 to 10 R trade with the refinement on, right? But the same trade without refinement, so the same trade which you would have taken the entry here, right, without refinement, meaning that we're using this whole 500 pip zone. So the same trade without refinement would have been your stop loss about there, and your target is there. Boom. So this same trade without refinement would have been a 1 to 3 RR. So there's a difference of 7 RR. As I told you, there was a difference of 70%, right? So instead of you taking a 1 to 3 RR trade, you are now taking this right here, which is a 1 to 10 RR trade. So you can see that there is a 70% increase in your reward. And I mean, that's insane, right? That's insane. So this right here is the power of refinement, guys. So this will be the only example for today. I hope you find this knowledge very, very valuable, because it is very valuable. So without further ado, guys, hit the like button, subscribe if you haven't, hit that bell button on, and until the next one, guys, peace.